Hey, welcome to the morning brief. Today is Wednesday, December 6th, and we really don't have much going on today. 8:30 here, we had revised farm productivity, which was worse than expected, 5.2 versus an expected of 4.8. Previous was 4.7. Revised unit labor costs were down minus 1.2%. Trade balance was also up very, very slightly to worse than expected. But you can see that these are all yellow items. Nobody really cares. Looking forward, we only have crude oil inventories at 10:30, and that is it for the day. So really, not much to talk about. Trade balance going up worse than that means we're got more imports than exports. That's kind of bad. Revised labor costs. Labor costs are going down. It means that less people are employed. That's basically what it means. Revised productivity. I'm not sure exactly what that means because higher productivity is usually good, but they show that as a red item. So I'm really not sure about that. I'll have to look into that. But it is what it is. Okay, so not much going on the news front. Moving that outside, looking at the daily chart, you can see yesterday was barely, I do mean barely, a positive day. Really kind of an ugly day. We're gapping up this morning. Where can we go? We're just stuck in this sideways action of this bull flag. And the question is whether or not it's going to break out to the upside. There's lots of overhead resistance, multiple trend lines, a double top. So lots of resistance, not that much support. Support is if it can break the bottom side of this little shelf below that low volume node of 45.44, we could have a little vacuum drop down into the 44.34s. There's not much in there. That being said, so what's top target? Probably 46.38. Bottom side, 45.19. All right, moving on. Looking at the intraday inventory, you can see that this is kind of weird because it's showing that we were up, but based on the chart, it looks like we were slightly down. So I don't know exactly what's going on there, but even if we are slightly up, we were definitely down on inventory, which is a divergence, right? So maybe not a perfect divergence, but divergence. So a lot of selling going on. Inventory was reduced by almost 21,000 contracts. That is pretty significant. And we've had several days now, 2 days in a row of selling where inventory was contracting. So again, it feels like the smart money is moving to the sidelines. Don't know, but that's my guess. Intraday overnight action was about 24 points. It's about normal, actually. Where do we have resistance? We got resistance at 46.07, 46.25, and 46.50. Support got some big confluence area around 45.73, more around 45.54. And if we really get going on the downside, 45.33. So that's kind of where the support resistance levels are. Stock Traders Almanac for today is 52.4, 52.4 for a very, very slight positive bias. And again, the rest of the week has positive biases, but they are very low. So on balance, though, the historical bias is to the upside. That being said, remember to subscribe, comment, and like. Have a great day. Hey, thanks for watching the Morning Brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com. Thanks.